China's first quarter economic data is out, and it reveals growth in the world's second largest economy, just as U.S. President Donald Trump dials up the tariff pressure. China's economy grew 5.4% year on year, and that defied expectations. You got to remember that the Chinese economy has been facing a number of headwinds as it has been struggling to rebound from a post-COVID-19 pandemic slump. And need we be reminded of those challenges? Let's bring them up for you. They include low consumer spending. They include low consumer confidence, also high youth unemployment, as well as the ongoing and prolonged property slump in China. Look, China has set an ambitious growth target of 5% for the year, but economists say because of Trump's trade war, that target is going to be very difficult to reach. Donald Trump has jacked up tariffs on China, reaching an eye-watering level of some 145%, and China in turn has retaliated with tariffs on U.S. imports, as well as other measures, including a curb on rare earths, which is very critical for a number of industries inside the United States. And that is why economists are expecting a prolonged trade war. And it's also the reason why global investment banks are slashing their growth forecasts for China for the year. UBS said that it has lowered its forecast for China's growth for the year from 4% to 3.4%. The bank also adding this analysis. Let's bring it up for you, saying this, quote, "We expect China's exports to the U.S. to fall by 2/3 in the coming quarters, and its overall exports to fall by 10% in U.S. dollar terms in 2025. The latter also takes into account slower U.S. and global growth," unquote. Citi adds this, quote, "We see little scope for a deal between the U.S. and China after recent escalations," unquote. So all eyes now on whether Beijing, under so much economic pressure now because of the trade war, will be able to roll out any new stimulus. We know that the Politburo is set to have a meeting at the end of this month and will announce and set its new policy agenda. Back to you, Rosemary.